Hello, welcome to Price Action Analysis with TIOmarkets. I'm Jan Muta, Chief Market Analyst for TIOmarkets. And today we will take a look at USD in several markets because it's always good to have a sort of wider idea on what's going on with different correlated markets. And at the same time, I would like you to subscribe and use the thumbs up button if you like the content that we provide here. Please do remember that even though we hit targets quite often, we don't provide investment advice. You should only watch this video if you agree with this disclaimer. If you agree with the fact that we provide only educational material that is supposed to help you to learn and to plan your trades, and if you agree that we don't provide investment advice, then you should watch this video. And if you do, let me take you forward to the charts. First of all, let's talk about Euro USD. I wrote this morning in our analysis at tiomarkets.com/analysis that Euro USD spiked down, and the reason this move remained as a spike and not as a conclusive move to the downside, the reason was that the US unemployment claims gave really a reminder to traders that conditions on the ground, so to speak, aren't any better than they were some time ago. So because of the COVID-19 fears, it seems that the economy is going to struggle for a longer period. There was 840,000 new unemployment claims. And this obviously makes traders to think that maybe there's more coming in terms of economic stimulus. And at the same time, the Fed just recently said that they will keep the rates low until there will be full employment and inflation around 2%. So that's a very tall order. And this is why I said this morning that because of this higher low in place and because of these conditions, I think the market is now more likely to move to 118.03, so 1803 to 1817 range. So let's see where Euro is trading at the moment. The current price is 1802, so the high here is basically right at this pivotal high there, and the high for today is sort of 1807. I'm using the MT4 charts here so that all the traders can see that it's completely possible to do all the analysis here in MT4 charts as well. So basically what we have here is market trending higher, creating a series of higher highs and higher lows. So as long as this sequence stays in place, it's more likely that we have price moving higher. Obviously at some stage the price fails to create another higher high and it sort of moves below the latest low, and that's a classic trend reversal. But we're not there yet. The price is at the moment trending higher, and the sort of next logical support level at the moment because of this breakout is this level here. The price struggled with the level but then penetrated it, so this is now a support level. If this fails to give support to price, then we obviously look at the channel low, and if the channel low doesn't provide support, then we are thinking of price reversing lower. But now we are yet again at a resistance, so it wouldn't be surprising to see the price move down a bit and then moving higher to the next resistance area, which is somewhere up here. Let's see where the channel high is at the moment. It's Friday today, so maybe not I don't think much is going to be happening today. The week is almost over, so this is probably for the next week. But the channel high is at 1849, 1850 at the moment, and then we have a resistance level at 1871 and 61.8 retracement level there at 1858 or so. So I think that region from, say, 1850 to 1870 is a likely area for the market to move next to, and so that would be the target if this resistance is first cleared. But now we are at resistance, so let's see how this market now reacts to this. Sterling hasn't been quite as strong as Euro against the USD. The market tried to rally above yesterday's high but failed and is now trading here and sluggishly moving not really anywhere. But we do have higher lows in place and we do have the price within this channel, so there's still hope that market could push above this resistance area. Obviously the situation in UK is much more sort of undefined in terms of what's going to happen with the relationship with the EU after the divorce takes place. So we are waiting for news, and obviously the market is also waiting for further news on how to trade, what the UK is going to be doing in the future. And if we look at this market a little bit further to the down here or further to the history, we have a market that has been weak, and then I think it was down here when we said that 130 is such a resistance that we don't think it's going to be easily penetrated, and this has been the case ever since. The market rallied against it, dropped lower, but has since then tried to move slightly to the upside, and at the moment it is kind of unclear. It's difficult to read this chart. We have resistance fairly close by, and I think it's as difficult to read as the situation in the UK. If this momentum fails, if the market now creates a lower high and then breaks the supporting rising trend line here and starts to break these lows, I think it's reasonable to expect the market to move to somewhere down to 2780 or so. If the market clears this, then the next key resistance levels are there on the chart, the 50% and the 61.8. So I don't think again that much is going to happen. You know, markets are full of surprises, but it's not likely that market moves big time before the end of the trading day today. USD Swiss, which you probably know that has a high negative correlation with Euro USD, has been moving lower since 28th of September. But before that, it broke outside of this or above this descending trend line, which was holding or directing the price movement for quite some time. But now the price is approaching to some levels that are technically interesting. So we do have the trend line here coming together with this pivotal low here, pivotal because the market pivoted at the area, moved higher, and then we have the 78.6 Fibonacci retracement. So those things coming together in this blue highlighted area means that we'll be monitoring this market, and we'll be looking for signs of momentum reversal, and then obviously we'll go to Euro USD at the same time to see how it reacts. Let's take a look at gold the next. In today's analysis, I mentioned that there is some weakness or loss of momentum in gold today. The market was indeed here forming this bearish candle, but since then the price reversed this momentum loss and has been moving higher. So now we have market approaching the recent pivotal high. The market came to this level the last time and then the selling started. So it'll be interesting to see how the market now reacts. If it starts to roll over, and then I think the next key level to look at is this sort of 1895 to 1900 or so area, because it used to be the sort of resistance, so it might act as a support. But before we get there, let's keep an eye on Euro USD and USD Swiss, how they react, because I think the driving force here is the USD weakness, and gold is somewhat correlated with Euro USD as well. So if Euro USD strength continues, then there's likelihood is that the gold keeps breaking the resistances as well. But like I said, USD Swiss isn't far away from important support levels, so worth following the price action in all of these markets. And obviously, if we have the market breaking this high, then we have the 61.8 after the next level right above it. But then if we get above this, I think we'll just evaluate the situation next week, because I think it's highly likely that it happens today. Now, if the market creates a lower or equal high here, then what does it mean? Does it mean that we get a move all the way down here and then the market bounces again and moves higher? Or does it mean that the market just plummets through and starts to go lower? I think the honest answer is nobody knows. It depends on how the negotiations about economic stimulus, how those negotiations can move forward, if at all, and then we're going to see how the US dollar trades against different assets and or different markets. So I would leave that as always. Here are the key levels on the chart, but most of all, follow the price action, because the price action is the evidence of your thesis being right or wrong. It just makes sense that you see what happens. If you don't know how to read price action, you should come to my webinars, and I'd be more than happy to help you to understand. But as a general rule, when you have a long candle out from a support, that's pretty good sign of momentum. And once you start getting smaller candles, that means that the momentum is drying up. So this is gold, and then let's take a look at Aussie USD. Some of you might remember how the market moved up here to this level and then started to lose momentum. That was the time when we said that we look for sell signals below that high, and indeed the market moved lower. We decided at the time that because then there was the original target 1 was down here, we decided that after this bounce that we will bring the target 1 a little higher, so because the market might just keep on ranging and then move higher. So the market just plummeted through the target 1 area and all the way down to the first initial T1 area. Now, when the market came up there, I mentioned that we'd be looking for sell signals below 71.55, I think. And the market moved lower for about 8 hours or so before it started to move higher again. Now, Obviously, up above 71.55, we don't look for sell signals anymore. And I think that was the thinking with the other market participants also. They decided to be buyers here and created another support level there. The market moved to next as resistance area. There was some lack of momentum, like in gold also, but this dollar weakness continued, and now the market has cleared the area, has moved above the descending trend line, and now looks like it's more likely to move to the next resistance area up there. So obviously, if the market moves up there, we'll evaluate the situation again. Should it move, sort of turn lower before that, I think then the key levels are down here at the key levels are 71.45 or so, and 71.22, and then eventually 70.93. But at the moment, market is moving higher. It has cleared this descending trend line, and it has cleared the resistance area. So at the moment, move is up. The momentum is to the upside. And as always, let's keep an eye on all the markets in order to understand more. And I have one more for you, which is a kind of a bonus here. Let's look at the Hang Seng index. So let me bring up the chart. Okay, and here we have the CFD prices for Hang Seng index, the Hong Kong index, and basically what's happening here is that the market has broken out of this downward pointing channel, and it has since then ran into resistance area. So this level here was where the market found support a couple of times, and now the rally above it was thwarted at the level where the market almost touched the 50% Fibonacci retracement and started to sell off. This momentum reversal there could mean that it's an early sign of market reversing and rolling over. Now it has moved, and it has moved below this ascending trend line, and if the weakness continues, I think a reasonable target for potential short trades are down here from 23.50.45 or so to say roughly to 23.760. So that's sort of target range if the shorts materialize, if we get signals for reasonable good entries, and if we get short positions. I think this is where we will look to cover those shorts. So a sort of alternative scenario is that the market keeps on finding support here and then slowly builds up momentum and starts to challenge these highs again. Then obviously, if there is no desire in the market to sell it lower, then it makes sense to believe the price action and go along with the price action. There's no point in fighting the market. We have seen it too many times that people just burn their fingers really badly, they lose money, and this is not what we want to happen to you. So don't fight the market, go along with the flow, see what the price action does, and then trade with it. Okay, and thank you for your time today. As usual, trade safe, never trade without stops, and you might consider closing your positions for the weekend so that there's no weekend risk. And yeah, thank you for this week. I look forward to seeing you on Monday. Have a great weekend.